Welcome to Taking Stock. It's Friday the 14th. I was going to say Friday the 13th then, but it's not. We just missed that by a smidge. That was yesterday. The 14th of July, 2023. I'm joined by John there. John Human. You're right, John?
Not too bad. How you doing, Justin?
Yeah, not too bad. You see the market. In fact, some of my stocks have been up the last few days. I'm quite happy. I do feel, right, like, all the bad news is out there. And I've said this before, and I've been very, I'm sounding like an idiot, but I do feel the bad news is out there. All of it. We know all of it. And the market knows all of it. The market's been down for 18 months. It's priced us in. At what point does the market start pricing in not as bad news coming down the line? Because the markets are way ahead of what we see on the headlines of the news and all that stuff. We know about interest rates. Everyone knows about that now. Everyone knows about inflation. Everyone knows about the high cost of living. We all know about that. When does it start getting less bad? Because the markets are way ahead of the headline news, aren't they?
Yeah, I mean, I think the problem we have is, you think, or one thinks rather, not you, one thinks we know everything and what's coming down the track. But I think the last couple of years has really demonstrated that we haven't got a clue what's coming down the track. So, when the sort of overarching thought was that inflation was transitory, if that was priced in, it was wrong. We've had a lot of sort of curveballs, black swans, unknowns, so I think the market is on tenterhooks, which is the problem, because when we thought we've known, what the outlook was, it's actually proven not to be the case, and things have sort of flipped in a way that was perhaps unexpected. This is well, I speak to Jamie Constable up at Singer, their macro strategist, once every few months. We think we talked about this sort of turning on a sixpence market. So, we think everyone's heading in the right direction. I mean, look at bond rates. The whole everyone blames this sort of quasi-Kwarteng, Liz Truss aberration for what happened, and here we are back there again. So, the grown-ups are back in the room, but then they're not. So, it's I think it's that sort of inability to gauge what the future has in store that is causing markets to be a bit jittery, to put it one way.
I can hardly hear. I just switched audio here. I don't know if you can hear me. Can you hear me, John?
I can hear you.
There we are. I got to put these in. Yeah, but hang on. But the figures are getting better, though, aren't they? They are getting better.
I'm not sure. I mean, we're about to slip into recession. I think categorically in the UK, we're seeing, the cost of living crisis. Certainly this is in the UK. The mortgage time bomb is about to go off. We're seeing a lot of people moving from those fixed rate deals, or having to remortgage from fixed rate deals, and a lot of people are going to be a lot worse off. We've spoken about this before. There is broader economic worry. And I think markets are reflective of that. Yeah, I mean, you could say the UK is cheap. We've seen recovery in the US, sort of the big stocks, but that isn't reflective of everything as a whole. I still think it's too early to be calling the end of this period, this hideous period.
I'm calling a bottom here anyway.
No, I'm not.
What I'm saying. On AIM, I just think we are. It's getting better. Honestly, I genuinely think that, and but AIM, for example, I did a look at the chart on Twitter earlier, and I said literally it is down at 2016 levels. How much is priced in? A lot of it is priced in. I honestly believe that. I mean, but the FTSE hasn't really moved at all. But let's go to FTSE 250.
But the FTSE 100 is always going to be very stable because of the nature of the companies within it. Your sort of big defensive plays that make up the bulk of the index. Although I would be worried about the banks. Given what's happening in the broader market. You spoke about the stress tests earlier this week. They all passed. But I still think that there is mortgage pain to come. And I think if you look across AIM, we are seeing a lot of little placings coming up now that are basically keeping the lights on placings. So this is the worry. Is it who's next? Who's going to be up next for a small fundraise because basically they need working capital.
Well, let's look into that. Let's look at some of the news today. Okay, so let's start off on a positive here. Winners, McBride, full year trading update. Now they are a leading European manufacturer of supplier, private label and contract manufacturing products for the domestic household and professional cleaning markets. But they said they're pleased to confirm that its full year results will report a return to profitability following the exceptional input cost inflation of there we are. the exceptional input cost inflation over the last 2 years, driven by COVID and all that, supply chain disruptions, all that's coming back to normal. We are seeing a peak inflation. Supply chains are easing up. So, I don't think it's that bad. I'm much looking McBride up right now. But do you know much about McBride?
I do. I've covered them for a long time, actually. I used to write about them when I was at the Investors Chronicle, before I became the editor, in fact. And it was a company that, you think about it, it makes private label cleaning products, personal care products, which are sold through supermarkets, own brand stuff. And there was always this idea that, hang on, the own brand stuff is going, it's cheaper. Therefore, when you have a cost of living crisis, people will shift their buying to those products, to those own brand, own label products. And there is an argument for that. The trouble is, their big customers are supermarkets. Supermarkets are always aggressive buyers. McBride has always been on the back foot. I mean, if you go back longer with that chart, you'll see the volatility.
Yeah, 2008. Well, 2018 they were 2.35 a share. They're now 31 pence a share.
Yeah, well, go back even further. You'll see this pattern repeating itself time and time again.
Yes, that is. It's probably a weekly a second. You see a bit more. Look at that on a weekly. That's going to be a weekly chart. Yeah, and that's quite volatile. So
now we're here right down at lows or near to lows. Now it's good to see them back on track. And you would this, given what it makes, it's, as I say, they're sort of chemical products. They're often sold in plastic packaging. Therefore, the oil price matters for this company.
That's coming down though.
Well, the price is coming down, but it only takes OPEC to start playing silly buggers, and you're off to the races again.
Justin's we showed the bull versus bear thing, but look at the chart there. I know it's been horrendous for them, coming down from like 85 pence in September 2021. But again, look at the 2-day moving average. A lot of people try and catch falling knives. Don't wait till the trends on your friend. And so look at this, and it literally. It didn't get above that. I normally look at the 50-day, like I said, across 50-day, and if it breaks previous highs, which it didn't there, and it's too steep, you want to see it flattening out. And so it's come along here, and it's gone below 50-day again, but broke above it here and broke previous highs. That's a good sign. And also broke above 200-day moving average. So now you can pretty much say, that downtrend hopefully has ended. Like I said, it's an all-time pretty much low. When does that trend start? I'd say it'd be nice to see a gap above, a move above that previous high there of 32. But that's McBride.
I think it's an interesting company. It's a big company. It's not touching a billion quid worth of sales, and it's been growing at the top line. It just has found it hard to make money from it consistently over the years. It's low margin, which is a worry. This is another new management team that's come in to try and focus on profitable growth. Got big sort of restructuring program that's ongoing at the moment. That costs money as well. And sure, they could, you can make this business more efficient, but it's just as I say, it's prone to market forces that are outside of its control.
Yeah. Okay. Another winner is Upland Resources. I used to hold some of these when Steve, CEO. I really like Steve, but he's moved on. But it's basically, do you know much about Upland? I know you're not into oil and gas at all.
I must admit, I don't know much about this company at all.
Well, they have operations in Brunei. And of course, Brunei, at one time, he was the richest guy in the world, really, Sultan of Brunei, and it was based largely off the oil and gas reserves. So it's a lot there. But they've announced that basically they're having a chat with the operators there. But it's a Sarawak block, SK334 Brunei collaboration. They met this week with the Petroleum Authority of Brunei, Dar es Salaam, and the central authority there. And it seems like a progressive, positive chat. And further things will be happening, but so going forward, it looks like they're on the. It just seems to be like a good chat they've had. A good meeting.
I read the RNS, and it sounded like they were reporting that they'd had a conversation.
Yeah, I know, but but the thing is, it's a positive conversation. If they'd say we're not interested in what you're doing, but nevertheless, the share price is up there. What is it, 18%? Let's just share the screen to show the chart. So again, look, 2-day moving average, bring it up here. Peaked out at 0.8 down to 0.56, but it's a back above that now. We've got a bit of in fact 50 days crossing down, but at least it's breaking back up above those lows there. So that's Upland Resources. A lot of holders of that. Now let's go to the losers, a company that literally was against the trend when most of AIM were going down over the last year and a half. This company was going in the opposite direction. Zoo Digital. Do you know much about those, John?
I do actually. And again, I mean, this is an accounting issue as far as I can make out from the RNS that's caused this wobble.
And there's more than that. It's a bit further down as well. When they talk about the Q1 update, and it's looking a bit soft. They say,
yeah.
But I mean, two things.
I think that is so. The accounting issue. Nobody ever likes to see an accounting issue that means that, you know, certain numbers, and I think in this case it's adjusted EBITDA has to be restated downwards, although EBITDA is being restated upwards. But I do know this company well. It's sort of basically a tech-enabled localization company for the film and TV industry.
Yeah.
So streaming, so, you know, it's subtitling, it's dubbing, it's all that sort of stuff. And, you know, given the world we're in, where, you know, it's sort of a global streaming market, and we're selling content to other countries are selling content to Western audiences, you know, sort of manga, that sort of stuff. You know, this is a good company, high margins, tech enabled, in a sweet spot. I think the problem across this sector that it's in, and by sector I don't mean tech, I mean TV and film, is that there is a huge spat going on in Hollywood at the moment. The writers are on strike now. The actors are going on strike. You know, we've seen some really poor performances at the cinema from what you would have expected to be blockbusters. You know, things like Indiana Jones. You've seen the very largest cinema chains, you know, collapse. Cineworld, although that was largely of its own making, thanks to taking on far too much debt. But yeah, this writer strike is a real problem. It's a real problem. I've unfortunately got exposure to it because I bought a company after we spoke about it called Facilities by ADF.
Yeah, recently they haven't been listed long, have they?
No, and I really like it because it's you know, again, it's a location services provider. You know, so you've got a lot more content. Well, this was the theory. A lot more content being produced. A lot of big film studios being built in the UK. Huge amounts of investment going into film in the UK. But the trouble is, if there's no actors and no writers, then there's nothing to make. So you know,
well, you got AI. I mean, use AI.
Oh right, no, but you know, this is it's a real problem, and you know what's happening at Zoo and what's happening, you know, at ADF. This is the ripple effect of this thing, and of course, you know, the streaming market was arguably overheated anyway. You know, everything went a bit doolally because we were all sitting at home watching too much telly, and that's changed a little bit. So yeah, I what I would say is that when the dust has settled, this is a very good company.
Yeah,
both of them are very good companies.
Yeah. Well, yeah. So Zoo is it's saying that the brokers have also downgraded. I think they've gone from like 240 a share to 170 today. But ADF, this is the group revenue from ADF, and they like not listed long, but the huge growth from. In fact, of course, 2020 was a COVID lockdown year, pretty much. But I mean, the adjusted EBITDA 8 million, and what are they at now? So. They're literally 37 million market cap, so it seems like a good price there.
You can buy those shares for less than 9 times forecast PE. You know, it's extraordinary. Zoo Digital was a bit more expensive, as you would expect. You know, being a tech company, 19 times forecast PE, but that's a PEG ratio of 0.5. So you know, its earnings are growing. You know, at a lick, and obviously we might see some slowdown, but you know, there's value going to emerge from this sector as a result of this. It will not last forever.
Yeah, well, look at this. Most read here on Vox is Versarien, MGC, ITV said they're not going to buy that company, or whatever it was, and Savannah. Pretty much the top 3 of the 4 are about placings.
Yeah.
Now, 2 of those are some of the biggest fallers because the placings are massively discounted. Savannah Resources isn't. They've done a placing not at a big discount. But these are small placings, literally 650 grand. I mean, will that even cover the costs of AIM? You know, for a year, probably will. Yes, but I mean, and again, MGC both that just shows how hard it is to raise money in this period of time. And like I said, unless you've got a well-stacked, you know, share register of institutional investors that like the company, you're going to find it hard to raise. And that's what's happened here largely. I mean, Versarien's had problems for a while now since the CEO stepped down. I don't think he was edged out, basically. But Neil, they was edged out. He founded the company. They've been burning a lot of cash for a long time. There was a previous 10 bagger, though. I held some of that.
It was
when
it was hot.
Graphene, hype came in. Yeah.
It was hot as hell. Yeah, riding that graphene hype wave. But you know, I remember going back. Look, when I back at the IC, and one of my team looked at this, and you know, we started digging around in the accounts, and there was never a lot of graphene revenues in there. You know,
no, there wasn't. Well, what I quite liked about it was generating revenue from other parts of the business, but you've got graphene burning away in the background, and that's what took the hype. It went from about 8 pence to 130, 180, I think it went to. But it's come back down with a massive bump there.
I had a bit of a run in with that company. Let's just put it that way.
Oh yeah, okay. What happened there? What do you mean running? What do you
running? Well, we reported what we felt we saw, and they didn't like it. But more to the point, what happened was quite interesting. They did have a very, very active supporter base on social media, and you did find that anyone who was critical of this company would find themselves in the firing line of Versarien fans. I think the fans are less enthusiastic now, but still, I'm not surprised
because it's most read, and that's they are one of the most followed companies still, and graphene still excites people, but the value destruction has been massive, really. You could say some of that value wasn't there originally.
No, for me, it is an example. Dig around in the company. Actually, if you've got an amazing story, actually try and verify that story with some facts from within the company's accounts. Look around the market, but also just don't fall in love with companies to the point where where you can't accept criticism of them, because that criticism might save you a lot of money, and that would definitely be the case here.
Exactly. Do you know what it says to me? When people get really overly defensive on a company, it tells me they're overexposed to that company.
I would say so.
That's a good way of measuring it.
Yeah.
If you find yourself, if someone has to go genuinely looking through the accounts and says, this is why they're making this loss, they're much cash, and that's factual. Figures are fact. And I always say, regardless of what any CEO, I'm not talking about Versarien, don't believe the CEO, believe the figures. The figures are facts. And if someone's questioning the figures, you got to have a look at it. If you can't just look at them and say, be objective, then you're probably overexposed. I've done it in the past. I've been really defensive on stocks I've held because someone's had attacked them, and I've been really into the company. And I thought, and looking back, that person was probably right. In fact, one of the stocks that happened was Gfinity. I probably got, quite close to John, the new guy, who I really liked. And I wanted to believe his side of the story. But the figures were telling me something else, and in the end, where's that gone? That's on the edge of going pop, pretty much. But
it is so interesting. It is so interesting. Again, I think that's sort of the psychology, the endowment effect. I think they call that one. It's you value something more highly because you own it.
Confirmation bias on everything. Bad news comes out, and you see you spin it positive in some way. It's like you never any negative news on it. It's not a good thing. I've done it many times, but now literally I keep saying, figures of fact, and I try to keep within 10% or less exposure to any company, because once you go, honestly, it does distort. We are emotional beings.
Exactly.
And once you have too much money in a company, you get emotional about it, and you don't get analytical or objective about it. You just, get a bit too close. Anyway, let's look at the front page of Vox here. John, you just done an article on Equipmake. What do they do?
Yes, I really like this company. They're just, funny enough, just up the road from me in Suffolk, and their main business is the electrification of bus fleets. Now this is quite interesting because if you think about buses, diesel powered often, and is pretty heavily polluting. Building a new bus costs a lot of money, but the bus chassis itself lasts for a very, very long time, and it's buses, and they're moving into coaches as well. So rather than chucking these buses away and buying new electric or hydrogen buses at great expense, what Equipmake enables bus fleet operators and coach fleet operators to do is essentially retrofit EV power onto those EV drivetrains onto those buses. And it's got some big contracts, First Bus, TfL, as I said, moving into coaches. So I really do think this is fascinating technology. Look at today's update. I mean, it's still loss making, but that order book's growing fast. It's gone from IP to commercial. It's made that leap, and I always like to see that in companies. I think there's a lot of skills. Funnily enough, the reason it's in Suffolk, and this might sound very strange. It's sort of North Suffolk, verging on. Actually, it might be Norfolk. It's near where Lotus used to be, the car company. So you've got a real massive engineering hotspot up there by the old Lotus car factory, which is still operating, incidentally. It's just a really nice company. They're doing other sort of electric projects, moving into electric flight. Which everyone had assumed was a pipe dream, but they've got some interesting little contracts there. I really like it. Aquis listed. Nice company.
I was looking for the chart then. I couldn't get them on Trading View, and they don't do Aquis stocks as yet. Who knows they will? But there are. Yeah, most red RNS is Versarien. Like I said, they raised 650 grand and 1 pence a share. I think an RNS worth reading today, and I don't hold any stock in this company, but ATOME Energy, and it's worth reading this, a transaction by a significant shareholder.
Yeah.
So it looks at first glance, that it's a big shareholder selling down. But no, Molecular Energies, which is a former parent company of ATOME prior to the spin out, they sold 800,000 shares, which is about 2% of the company. And they sold it to this person called Mark Crandall, or his Crandall Family Trust. Now, Crandall, it was, Glencore's, head of Glencore's oil trading business before he founded it in 1993. Trafigura, this company. But what's also interesting, basically what they do is they are targeting green hydrogen, ammonia, fertilizer production with over 500 megawatts of projects in Paraguay, Iceland, Central America. Now, first of all, that guy there, he's obviously quite influential, Mark Crandall. But if you go back previously on other RNSs here, then you'll see, if I just find it, that Baker Hughes has also taken a stake. I thought, really? Was this here? Baker Hughes. Now, Baker Hughes is probably the biggest, or one of the biggest oil and gas services companies in the world. And so that's very interesting. You've got this company taking a bit of a stake, and that guy taking a bit of a stake. I don't know much about this, but I mean, it just seems interesting. When you always get big players like this taking stakes in a company, then you've got to look at it. Do your research, because they obviously have, and they know what they're about. They know their onions, kind of thing. So, but it's at the moment it's trading in a range.
Not about a share price, really, under the circumstances.
No, exactly. So IPO'd here, and it's basically what IPO'd at 80 on pence maybe, and it's 95, so it's above IPO price, and it's going up and down the trading range basically. But I put an alert there to see if it breaks that previous sort of high. In fact, let's drag that down a bit.
I think it's quite interesting. It's sort of pre-revenue, loss making. However, green hydrogen, green ammonia, green fertilizer. It's all again part of that transition, that energy transition. Big companies like Baker Hughes do take stakes in smaller companies like this, but I wouldn't bet that it will ever come to anything more than that. But they want the possibility that if this is the tech that's going to be the future, they want part of it. Things like this are really important. Hydrogen is a really important part of grid storage. Potentially, green hydrogen, you can burn it instead of other fuels, gas. So this is all part of the sort of net zero transition. And funnily enough, looking at where its projects are, Latin America, it's funny because a lot of the really sort of innovative stuff seems to be happening in places that you wouldn't expect it.
Yeah, exactly. Yeah, but so maybe one for the watch list anyway, and just see how it goes. There's probably a little bit of capital needed for that company anyway to get forward, but it's interesting.
But it won't necessarily have the problem raising that capital if it does have supportive shareholders. Yeah,
exactly. Most followed is Future. I've talked about Future quite a bit. I do own some stock in Future. I bought some recently. I bought some on the breakout here because I believe they're massively oversold. But the reason why I bought it was after they announced a share buyback of 45 million, and I think that's they've never done that before. A new CEO has come in. He bought a chunk of stock at £8.80. Bought that, and he bought 90,000 shares, which is around about £880,000 worth. So he's put his money where his mouth is, but they are buying it's for 45 million, and in fact it could be up to 96 million pounds worth. They're looking for authority up to 10% of the share price. So I think that's because they are on a PE, I think, of 5 now.
It's cheap as chips.
Chips. And so even if they're forecasts come down, then it's still going to be cheap. So I think. I do like the business, a high margin business, 20% operating margin. So it's a decent business. But
what does his balance sheet look like? Why is it
they've got plenty of cash, but they've been usually they buy, companies, acquire companies. That's part of the thing. I think they're going to slow down on that side for a while and just use that to pay down debt. So they've got net debt is 1.4 times EBITDA.
That's quite chunky. It's quite chunky.
Yeah, it is.
Especially when it's buying back shares at the same time, using debt to buy back shares. And that doesn't feel like a sensible approach to me.
Well, I think he's desperate, the guy, because it's actually a new CEO come on board, and he was a star of the stock market. But Yeah, I think it's about 2.4 times operating profit debt is. So it's not it's not a huge massive. But
No,
yeah.
but borrowing's getting more expensive, and it's getting more
Yeah, yeah.
expensive,
And
then
yeah.
and then buying back shares with expensive debt. I'm not convinced by that.
Okay. All right.
It's an
I'm not.
interesting
Yeah,
company.
I put a bit in, and if it breaks down below this, I think this breakout level of around about where 730 odd, I'm pretty out because I don't think it's not going to go up. It's from there, but we'll see. Well,
We shall see.
just in my mind, right? Just the buying of 45 million quid worth of shares, sentiment-wise, will turn around. All you've had is sellers, and I think the sellers are dry. Even that announcement, sellers have stopped. Any shorting has probably stopped now because they're going to start buying up. So I just think even the technical, going into the market and buying shares up, and the volume, the buy volume going up massively will help the share price. And the fact there's a PE of 5.
But why are people shorting? Why is the PE so low? What is
two reasons. They believe one is obviously it's coming over 40 quid. A lot of it's priced in, but I mean, advertising markets have slowed down during a global recession.
Yeah.
Of course, that's there. And there's also the word about AI taking over their business model, but they are already incorporating AI into their pages and stuff. So they are. He's a tech guy. He's up there leading that area. So I'm not really worried about that too much.
I think that share price graph is well reflected. But again, one of those situations where there was a stampede into these shares. It just became very, very popular all of a sudden.
Yeah. But generating a huge amount of cash they were, and they were very ambitious. When there's cheap money, or like I said, they were using that debt, and they're very ambitious acquiring companies. They own things like Go Compare, Country Life, Marie Claire, all those, but 250 sort of online digital magazines like that generate, good high-end sort of content that generate lots of advertising and subscriptions. So yeah, that'll slow down. But
to be fair, it's still generating a nice amount of free cash flow. So
yeah. What else? Let's pick a. We haven't much time. I want to get finished by past. We could. So John, pick from the sort of top business news. Pick a story. We've got AI trends drive a rise in students wanting to study computing. We've got US Competition Watchdog has launched an investigation into the creator of chatbot ChatGPT. Public sector workers, including teachers, being offered a pay rise, or Gatwick Airport workers can be striking for 8 days over the summer period. Which one takes your fancy?
Well, let's talk about Gatwick, shall we? Because we've talked about wages, and obviously the public sector wage settlement feeds into that. AI, I think it's been discussed to death of late. It's very interesting technology. It's going to be very disruptive, and it's not surprised that people want to study it, but it will be like any technology. We will adapt to it as an economy and as a society. So yeah, Gatwick holidays, because the travel sector should be really benefiting from a huge bounce back in demand. Since the pandemic, and every year there seems to be something that comes along and makes it just hellish to go on holiday.
Yeah, exactly. I mean, it's also still very expensive. Like I said, we haven't we normally have a couple of holidays a year, and we haven't this year because we can't find anything. The holidays we were booking, say 2 years ago, last year, are literally double the price, and it's gone nuts. I think what's going on there? That's got to slow down there. There's a comment on YouTube live there. By the way, someone said, "Can you suggest a long-term success story on AIM?" Yes. Well, it depends how long term you're talking about. But we are in a bear market. I mean, just looking at the future just then, that's 20 bags or 10 bags or whatever. In fact, Astos and Boohoo did really, really well until this credit crunch, the inflation got up. So how long term are you talking? Because they've been rising for like 5-10 years. There's many AIM companies have been rising 5-10 years. But if you're looking at the last 18 months, you'll find it very hard to find one, maybe, outside the large international companies or FTSE 100. But even the FTSE 250 companies, they've taken a hammering. Good house builders. In fact, FTSE 100 companies, good house builders, have taken a hammering. So you can't just look at the last 18 months and seclude that and say all AIM stocks are rubbish. Because, yes, the indices have been hit massively, but there's been losers in every indices over the last 18 months, hasn't there?
Yeah, it's been pretty hellish. I mean, AIM it's a funny old market. I mean, I think there's some really lovely companies sort of hidden away on there. Outside of the racy growth stuff. The company I always liked was Nichols, which makes Vimto. soft drinks company, and with a big presence in the Far East. Now, it's been around for a long time. AIM is a good market for it, and I think you've got these little hidden gems that sort of knock around in that market. But they don't get all the sort of airplay that some of the racy growth stuff does. So I like those sort of companies. Steady as she goes. But yeah, just going back to Gatwick. On the beach is it's really struggling. I'm just thinking.
Well, I held those until the last update. I thought, what the heck are they doing? They went from 60 million in cash and no debt to almost burning all the cash, having more debt. And they raised my. I've lost. And it didn't seem to me like they were particularly positive. They spent a lot of money on adverts, and I wasn't that impressed. But anyway, listen, we have to cut it there. Yeah, we have to cut it there. By all means, get involved in the comments. But it's.
I'll tell you one company that is bouncing. One travel company that is bouncing back very strongly is Jet2. That's one worth having a look at. Great company.
Yeah. Okay, cool stuff. Thanks, Matt. Take a stock. We'll be back on Monday. Have a nice weekend, everyone. Cheers on. Bye.
See you later.